Yo, yo, yo. Welcome back to the channel. Hopefully you had a good weekend with your family. Today we're going to look at, definitely going to look at macro S&P 500 because obviously a ton has happened since the last time that we made a video. I think that what I'm going to start doing is making videos on Sundays and not making videos on Fridays most likely, because it seems like people are more interested in the market, and then Friday, like, you just you have a weekend, so people aren't as interested in watching videos about the market, stuff like that. So let me know when you watch videos about the market, or maybe you watch like cat videos or something on the weekend. But if you haven't already, make sure you subscribe to the channel, drop a like for the YouTube algorithm, and leave a comment down below to let me know your thoughts if anything sparks your interest at any point in the video. So let's get into it. So the things that I'm watching, we're going to look at the futures chart here and always just be correlating it somewhat with SPY, because I know SPY is a little bit more popular within the community that I talk to be traded. And roughly, if it's 40.22 on ES1, for example, it's going to be about 402, right? $402 for SPY. Just thinking in terms of that, because I'm not going to go back and forth and try and clarify those prices too often. If you were following the channel the past few weeks, one of the things that we were looking at was the 9-week EMA, which is here in purple, not EMA, moving average, crossing over the 21-week moving average in the near term, and you actually got that cross at the open of this candle today, and you were rejected off of the 9-week EMA today on the market rally that you had from open. Just looking at shorter time frames, obviously you pressed straight up. You tried to hold this 21-week moving average as support, and then you got rejected back down below it. From this Fibonacci that we have drawn here, which was the start, basically the start of the breakout of this trading range, this is actually a test of the golden pocket and a breakout of it again, and almost a failure of the 0.5 Fibonacci. And what I want to pay attention to here is I have my VPVR up. This is the volume profile by visible range. What this tool can tell you, if you're not familiar with it, is it tells you how much volume by price there is, right? So wherever you see the bars, that is correlated with the price that is horizontal along that axis versus normally how you're seeing volume is played out by day. So this is volume by price versus volume by candle, right? And what I was noticing is this correlation. Remember the past few weeks how we were pointing out how when the 9-week and the 21-week moving averages would cross over each other, perhaps we would have some consolidation before a further move up. I think that if we would have used VPVR, we could have more accurately calculated where that range would have occurred. And we got pushed down out of the Powell speech, obviously very wicked, but really it's not that strange. It's just a distribution move, right? And so now you're seeing this volume gap that we're trading in. And what is this range? So just to show you roughly what this range looks like, let's change the color of that so it's a little bit more clear on the side of the chart. So the region that needs to get traded out here is 3973 and 4098. So basically on SPY, $397 to $410 is that undertraded range. When you correlate that with the Fibonacci that you have here, what I'm expecting here, and you can see that your 707 sits right on that 397.8, is that this will actually end up being the range. So I think that probably in the short term, you press up here towards 410, and then you get rejected back down, and then you're going to have some trading that occurs within here to fill up this VPVR. If you're not really familiar with the technique that surrounds VPVR, typically these lower traded regions of the chart act as somewhat of a vacuum. So the price is going to be kind of drawn to that area, especially if you break higher volume shelves, right? So as you can see here, this high volume level here of 415-ish, once you got rejected out of that, it's basically a signal that you're going to go down and press to test the next relevant volume shelf, if that makes sense. So the next region that you was more heavily traded is like 392, right? And obviously I'm like pre-correlating the SPY. So even in this scenario, you could have this sort of accumulation look that occurs in the short term, which could turn into an LPSY depending on the volume, and you could continue to get pressed down. But in the short term, you might even have a spring down here to the 786 to fill out that volume shelf before you continue to trade within this range, right? So I do think that relatively you're going to get range bound here. And I know that I was saying that before with the correlation of these moving averages, but I think that the volume profile is a little bit more important to determine that range. So that's kind of what I'm expecting. And to be honest with you, I was a little bit more bullish whenever that occurred. But once we broke below this 415-ish level, especially once we broke through the 408 level, I kind of was like, okay, we can't be as bullish as far as like how high that trading range is going to exist. So it's really important that you're always checking your bases. I really would add VPVR to my daily use if you haven't already. And I need to do a better job, especially on these macro reads, of using that as a tool to determine where institutions are going to want to look for liquidity. And that's all it is a liquidity tool. So that's where we are on that. So basically what I'm expecting here, I do think that you do continue to push up here to 408-ish before you get pressed down further. So that is what I'm expecting. I think that bulls had a good answer for the gap down last night on futures open. And I think that overall you're going to see some continuation to the upside. But long term, I am fully expecting that you do, like now, I am pretty much convinced that you're going to come back down and test the 380-ish region on SPY. So that's 100% what I'm thinking. And then from there, we're going to make a bigger decision on what we think about the broader market. And I do want to do a crash comparison too. Maybe make a separate video for that or something. Because I know a lot of people are making those crash comparisons, but I think that the way that I have mine broken down to compare it to 08 or 2000 is a little bit more strategic rather than like, wow, these charts really look similar from a technical aspect. So let's take a look at, I know Ethereum is having a big day today. I had a really interesting Fibonacci that I drew on Ethereum that I want to share. So if you draw a Fibonacci from the top in 2017 here down to the bottom, right? And then you use these as extension levels, you can actually see that this entire rally, right? So this is all the way down to $80 from almost $1,500 on Ethereum, right? And from the bounces, you can see the heavy correlation with this Fibonacci, and even this local top at 4,800 is almost nailed at the 1.414, which is a pre-drawn Fibonacci. It's not a special Fibonacci level or anything like that. This is something that is in the presets of Fibonacci retracement. So if you don't see the power in this tool to understand the levels that are going to be traded on something like Ethereum or really anything in the market, you can see perfectly. I mean, the 885 acted as support here before you had this previous rally, and right now you're finding support on the 1, which is obviously the top that you were drawn from. Obviously, the previous all-time high is going to act as a strong support. I actually like, in the short term, from a bullish perspective, I kind of do like the way that Ethereum's chart here is shaping up. And like everybody wants to be a crypto bear, but what you have to realize is when you rally, right, from this low to this high, you have 131%. The way that you're going to calculate your retracement is through Fibonacci as well, right? So right now you're finding support on the local 382. And I think you could get pressed back down even lower, but you have to realize that these Fibonacci levels are now calculated based on that huge swing in price, right? So the retracement is going to be much deeper than it would be if it were like a 10% move or a 20% move, if that makes sense. So just something to be mindful of. I do think that like in the next days, weeks, It is seeming sort of likely to me, perhaps correlated with SPY going to 380-ish over the course of the next few weeks and months, that Ethereum comes back down and tests this like 1,000 to 1,200 region that I'll highlight here. And I think that here you're going to have a pretty good long opportunity, in my opinion, on Ethereum. But for the time being, even right now, you probably have a good short opportunity, like right this moment as you're testing this 1545-ish level. So I do think that you get pushed down here. And I mean, you're looking at it here, you have a pretty good opportunity on the short side here. So definitely going to be playing that personally. Let's look at AMC. I drew this trend line. So this trend line is based off of the double bottom that occurred after the 2021 buy button incident. And you can see that it kind of just coasts right through this recent trading range that we had that acted as accumulation going into this distribution that occurred up here at 1675-ish on the new AMC chart, obviously. But now you're finding some support here. You had a big pump today off of this trend line for AMC. So it is something to watch. And obviously this is going to continue while this trend line, the green trend line that we've been following for a very long time now. I mean, literally since like the beginning of July, late June, I've been following this thing. This is really strong support for AMC. Like, I'm not gonna lie. And you're starting to tighten up here as far as like what this shape is gonna look like. And I had somebody on Twitter say something to the tune of oh, this pennant is going to go into 2030 at this pace or whatever. But, like, this is not a pennant that I'm drawing here. With this, I'm drawing support from the all-time low, right? A bull trend from the all-time low to the local lows and using that as a support trend as well as the macro bear trend. Like a pennant, which I don't even really use pennants, but like a pennant in its typical example would be like you have a raised trading range, right? So you have this rally up here, and then this is the pennant, quote unquote, that this person is referring to. That was like a really popular thing that a lot of people were watching, which is a 50-50 pattern, by the way. Like, to me, I don't ever trade these patterns as like, oh, it's definitely going up after this. To me, this is a 50-50 pattern, and once you break to either side, it's just more indicative of like where is the big move going to be, right? So like as price is tightening, it becomes more and more likely that as that volatility is weakening and weakening and weakening and price is getting consolidated, whichever direction you have a break to is going to be a direction that gets a lot of volatility and a big move, right? So it is useful in that sense, but it's not something that you look at and then go, yeah, you can tell predetermined that this thing's going to go up based on this sort of pattern, right? So that's basically what I'm looking at with AMC. I do think that you round out here, you end up finding support. If you lose these levels, I mean, you're going to come back and so the way that you would figure that out is you would draw a Fibonacci for this local range here. If you lose these uptrends, you would be pressing down to, I would say 745 is the level that I'd be looking for on AMC as far as the next opportunity for a bottom. So it is a really critical time for AMC to be turning around here. But as I've said, I do think that this chart is really rounding out and shaping up. You really want to stop getting bull trapped off of this trend line break. Like, this trend line is really killing you. And I mean, volume did come in off of this sell-off. So it is going to be time for bulls to step up soon. I do think that it's more likely that you come up and you test perhaps this $12-ish, $11.36 region before you break down below this downtrend, though. So, uptrend, I'm sorry. So to be honest with you, like, it's going to be really sideways relative to AMC as far as like big breaks up or down. You're going to have some relative sideways action that's going to pretty much look something like this probably. And these are big moves because of how volatile AMC is. And then from there, whichever direction that you break is going to be, a pretty important direction. just because like if bears win over this uptrend, this macro uptrend, then it's pretty indicative of like where the stock may go in the future. So definitely gonna be wanting to watch that. Is anything interesting on Bitcoin? Ape, as we were expecting that this pattern was going to play out and be this more bearish sort of pressing down sort of price action, just because of this, like the price is just holding higher than it should have in the relative trading range. So it is a good time for you to come down and test these Fibonacci levels. You've gone into your golden pocket now. Let's see. And you found support for the time being. This thing is so funny looking on a day-to-day chart, but it's just because the chart is so young. It's so volatile. Like this little move here, like it looks so sideways, but this move here is 7%. Like it's just crazy how rangy Ape can be. But yeah, I mean, we just don't have enough characteristic, right? So like I kind of popularized the AMC loves 786s phrase, and the reason that we were able to come up with that phrase in the first place is because AMC kept on hitting 786s, right? So like, does Ape have that same characteristic? Does it get traded the same way? We don't know that yet, right? I'm just kind of going off of my instincts here, seeing this rounding out sort of pattern playing out, and knowing that it's more likely that you're going to see downside in the short term than upside. Now that you've gotten into this retracement range, though, like you're not in the worst place. I'm not necessarily excited about it popping off tomorrow. I do think that you probably are going to consolidate in this range for a little while, and then from there we'll see if you start to round out the other way, right? So you really want the institutions to be sending the signal of like we're holding price at lower than normal rather than higher than normal. See how this is just unnaturally high price action, and you're just kind of hanging up in this range, right, above this trading range. What you want to see is more rounding out, right? So like holding lower and lower, and then starting to press upward. That's the sort of look that you want if you want to see bullish price action on an asset. So that's what I'm going to be looking for. Overall, hey Dave, why don't you look at the all-time S&P chart if you and use that comparison? Yeah, dude, like this thing just goes up forever. Oh man. We have obviously, I don't know when the last time was that we talked about this, but you have your macro retracement drawn out. I know that you guys are definitely looking at this and thinking, show me the crash chart, bro. I don't know if I have it like fully prepared to be sharing yet. But yeah, I mean, looking at macro retracements for this, the 0.5 is not the worst place. You have this big chop zone that occurred here before the rally, as like a potential long-term support. But just look, I'll show you briefly just kind of what I was looking at. And I was looking at DJI just because DJI has a little bit more data on the historical charts, which isn't really relevant for this, but I'll just see if it's already drawn up here. Oh yeah, I was talking about it on the stream. Oh, I just got really big. My bad. Oh, I didn't get really big at the beginning of the video. That's what I'm supposed to do, right? Like, have my face all up in the screen and stuff. That's what I'm supposed to do, dude. Go follow me on TikTok, by the way. I was trying to replicate this without doing a bars pattern, but more make it selective based on the Fibonacci's. But basically, you can see that you have this kind of broadening wedge look, similar, obviously, to the type of look that you have today, right? Like you have this kind of broadening wedge. That's not so important right now. Broadening wedge. Let me take this trend line out. So up until this point, right? Like this looks, and I don't know if it's easy for you guys to see or not. Fuck. Let me make the text a little bit bigger. I know I can make this chart side. Let me just do that. I'll just split it. Does my head get in the way when I do that? Oh, now the text is all big, so it's taking up a portion of my screen when I'm trying to split screen. It's very convenient. Let's just make this a little bit more dim. Oh, Dave, why don't you edit your videos, you frickin' frack, dude. Whatever. I'll just delete it. I can draw it again. Take this trend line off. Extend this out in this way. So obviously you can see the similarities are, I mean, look, the similarities are undeniable, right? In nature, you have the similar type of price action, the similar rejection points. If you want to draw it here, as if those are bull traps that are occurring the same way that they happened over here. And I obviously drew this "you are here" arrow, which is kind of a meme, but yeah, I mean, at this point, and it seems like this one's happening a little bit quicker, right? So perhaps you go to a lower time, like a lower time frame to get the similar look. Let's see, maybe I move this one to a week. Should edit your videos, dude. If you edited your videos, we wouldn't have to sit here. I don't have time for that. I will edit my TikToks, however, so you can go follow me there, and then those are gonna be good. I have some pretty good stuff that I'm cooking up over there. But yeah, you can see, so this region of the chart here, similar to this region of the chart here. Obviously, you have this kind of downward when the channel began. We'll do that, right? So it is obviously very similar. Not a big difference here at all. If you drew a Fibonacci here, just a local one, and then let's just do a comparative one here. You are currently at the 0.5, which is like right around here, just like I have the arrow. So that's about right still. Nothing really crazy has happened. It would, I mean, I was just saying, yeah, you're gonna come out here. You're probably gonna come up, test this region of the chart, and then I do think that you press down. So look, I mean, everybody says, oh, similarities, blah blah, but as far as when you draw it up with Fibonacci, it does give you some pretty creepy looks, but yeah, I think that and then what happens? So you go down to your 1.618. Let's just draw that, and so this is like a nosedive down to the 1.618. I mean, this is significant, guys. Like, it's the type of event. It's kind of hard to say, like, yeah, you're gonna predict that this happens. But I will say that if you were to press down in this manner, let's just draw that out on SPY just to give you an example. So like I said, you kind of round out here, and those were big candles, right? So like it could be a quick retracement, but it's still gonna take a few days, weeks to happen. And then what did we say? 1.618, just for example. And it could be different on SPY, so don't like crazy hold me to this. I think that you just kind of dove off of a cliff after that, right? So what is that? 324. It's not that crazy. I mean, it's not that. What was crazy was what happened after, right? 324 doesn't seem that crazy. And then you come back, and then you probably just tested. Yeah, you tested the 1 basically. So what is that? And then you kind of got rejected out of this 885 before you continued down. Ultimately, the equivalent, I think, is the 3.618. Was like the, oh no, you extended all the way out of your Fibonacci, but the 3.618 was the next stopping point. That's what I remember. Let's see here. So what is that? So see, this is where things are getting a little crazy here now. So that's 228. Could you imagine? Oh man, could you imagine what what people would be saying? And then you pressed out. See, you just can't draw this chart the same way. I'm not saying that that means that it's not going to work. I'm just saying that you see how you had the trend lines kind of extending outward, like the bottom green trend line is what I'm referring to. See how steep this one is? I'm trying to figure out how I can make mine. Well, okay, perhaps I should be more aggressive. I mean, okay, so maybe the SPY chart is kind of just like it's more difficult to do. Anyway, look, whatever. We'll do a whole video. I'll sit here and mess around with this for like a day or something and then come back and report my findings. I come back, I'm like, look, guys, like, save your money. Look, I know I was like against the '08 crash comparisons, but save your money, guys. But no, so that's pretty much it. That's the video. Hopefully you enjoyed the video. I know I kind of like jumped around or whatever, but was just trying to piece some things together, tell you guys about my outlook. If you don't remember from the beginning of the video stream, whatever, I'm kind of looking for a SPY to come up and test like 410ish. And look, I know that I said that about 415ish. I don't really see a situation where you're just absolutely just gonna continue blasting down in that manner. There's too much money to be made for institutions when it comes to these retests. Retail jumps in a bunch of puts. They're having a party on the Powell thing, and they're like, I'm gonna ride these till I get 3,000% or whatever, right? Like, there's too much money for institutions to make on the long side whenever that's happening. And also all that premium that they can absorb by selling those puts for so expensive, right? So just be wary of that, paying attention, and that's just my bias. But I could be totally wrong. We could come back here, and the market could do what I drew out here, and then maybe I'll have to build an underground what do they call those things? An underground, oh dude, my monitor is kind of in the screen. Is that the whole, it's been there the whole video? I'm rambling. I gotta go to the gym. You guys have a good day. Peace and love to you and your families. Hopefully you had a good weekend. And until next time, probably tomorrow. Peace. Black hole sun, won't you come? And wash away the rain, black hole sun. Won't you come? Won't you come? Won't you come? In my head.